Today, the people's gold will not be kept among the people. Hello again, it's Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. And today we're on the gold quest again with John Adams. Hello John, good to see you again.
Hello sir, how are you today?
Very good. And we had some pretty good coverage in news.com, didn't we?
Yes. So news.com decided to cover the story about the gold. So there's an article up on their website today. It came up this afternoon, talked about our series of videos about the gold issue. Obviously talked about the RBA's new webpage, about how they've responded to our initial set of videos. It then talked about the Reserve Bank Governor's comments last night. So at the annual CETA conference, he was asked point blank about gold. About when is the next audit? Is there any intention to bring any of the gold back to Australia? So we'll go into some depth about what the Reserve Bank Governor said. So that was sort of covered. And then there was some other voices in the sort of precious metal community in Australia who didn't necessarily talk about the issue of the location of gold or where it should be, but did make the point that they thought that the level of gold that Australia has at 80 tonnes is too low, particularly given that a whole host of central banks around the world are dramatically increasing their gold reserves. So we haven't spoken on that point specifically, but it is actually a point that I agree with, that the Reserve Bank should be not only looking to bring back our existing gold from London back to Australia, but we should actually be increasing our gold position as a hedge because of what's happening in the international monetary system.
Yes, I think that's a very interesting point, and perhaps we can come back to that in the context of how gold might be used in the future with regard to underpinning the currency or not, right? We've touched on it a few times, but I think there's more conversations we could have there.
Yes.
Not least because we know that a lot of Asian countries have been stowing gold like nobody's business to create an alternative currency base potentially into the future.
Exactly, particularly the Chinese, particularly the Indians and the Russians.
Yeah. Okay, John, so we know that the Reserve Bank Governor's speech at CETA was actually quite broad, right? But there were a couple of different sort of themes coming through. Firstly, the broader economic theme. So I think let's start and have a look at that first. And then let's go and think about the gold and the comments around gold next, because there's a whole bunch of issues there too. So let's start with that broader economic story first.
The governor said a whole host of things that just did not give me confidence at all about the management of the economy under the RBA stewardship. So the first one he was talking about, a few years ago, credit availability was too loose. That had been wound back, but now we face a situation of credit being too tight.
Well, I'm confident that in the end we'll get to a better place on conduct. There were too many examples that the Royal Commissioners highlighted where the conduct was not up to scratch and the penalties weren't strong enough, and we'll fix that. Who knows what the nature of that fix is, but I'm confident we'll get through that. My current concern more is about credit supply. Now, a few years ago, credit standards were way too loose, and there's been a correction of that, but I'm starting to be a bit concerned the pendulum might be swinging a bit too far the other way. We need financial institutions to take risk, and that means lending to some people who actually can't pay the money back. Some share of the borrowers will not be able to pay back, but if banks become very scared to make loans to people who may not, under some circumstances, be able to pay the loan back, credit supply in the economy will diminish, and that will hurt the economy. So the pendulum has swung from credit supply being too generous, perhaps to credit supply being a bit tight, and I'm hoping in time it will come back to more centre.
So even though that you and I have been speaking for nearly 6 months about this debt bomb, this domestic and international debt bomb, the governor is publicly saying that credit is too tight and we need to allow more credit to go into the economy, more debt, more borrowing. So again, no recognition of systemic risk. There is no issue. There is no bubble. And obviously, let's just get people more into debt because that's how we're going to lift our economic growth. and so-called prosperity. Now, I think if you go and talk to a whole host of people across the community, do you feel prosperous? I think a lot of people are going to say, no, I don't feel pretty rich at the moment. So again, Keynesian economics, flawed logic. Yes, he's got a PhD from a fancy university, but the core essence of what he's saying, because I get phone calls and emails all the time now from people who are watching me on this channel, but also in other forums, and they're asking about, well, what do I think about what the government is? What does the government know about these issues? What are they trying to do to manage it? Well, the RBA government's basically saying there's no issue. The issue is that we're not getting people in debt enough. We need to get people more into debt. We need to push that money out into the economy, push that credit out there, and basically increase the profits of the bank. This is an extraordinary statement by the RBA governor. So that was one thing I thought was very significant, very material. And I think you've obviously we've talked about this a little bit in terms of what the RBA has formally submitted to the Royal Commission, as well as with Treasury. The other thing he said was that, if we get into a crisis, he said, quote, that the Commonwealth balance sheet is quite low.
We're 10 years on from the collapse of Lehman Brothers. I think the Australian Treasury Secretary noted just on the weekend that excessive leverage fundamentally sits behind most major crises. And I just wondered whether you have any observations about how you think the Australian economy, and perhaps more broadly the international economy, is placed in the, should there be another shock event such as there was 10 years ago?
Yeah. If you get hit by a shock, the one thing you want to have is the buffers against that shock. So you can think of buffers coming in a number of dimensions. Buffers in the financial sector, and they're stronger than they have been any time for a long time. So the amount of capital and liquidity that the banking system has globally is much better. So that's a positive development and gives us some extra degree of resilience. Another buffer you can have is on the fiscal front. And here the story is not good at all. In Australia it's reasonable. It's probable we'll get back to a budget surplus this year or next or the one after. So, and the level of public debt is low. So if we got hit by another shock, the Australian government still could use its balance sheet to stimulate the economy. In many other countries, that's not the case. The US is a very good example at the moment. Public debt's extraordinarily high and the budget deficits have increased, and they're going to have budget deficits of 5% of GDP for as far as you can see. So the buffers in public sector balance sheets around the world are much, much reduced, which I think is a major concern. It's almost like the idea of building, paying an insurance premium in the good times has become unfashionable. We assume the bad times won't return and we don't need to pay the insurance. Fortunately, that hasn't been the case in Australia. The third set of buffers are really in private sector balance sheets. A downturn, if you can borrow more, then you can smooth your consumption, or firms can keep on investing. Corporate debt in many countries has increased a lot, so there's less ability there, and household debt levels, including Australia, are much higher. So there's less resilience in private sector balance sheets and in government balance sheets, but there's more resilience in financial sector balance sheets, so it's a kind of a mixed picture.
Now, he did say there are certain economies around the world, like the United States, that have very high public debt, but we have very low public debt. So we have the capacity to absorb more government debt to deal with any economic shocks. So again, what we did 10 years ago, Keynesian stimulus, more spending. Obviously, he hasn't ruled out taking the cash rate to zero. Steve Keen, when you interviewed him, said quantitative easing is coming. They will. I mean, this is something I've been saying privately to politicians and to other people across the country. My view is that the government is willing to sacrifice the dollar, and I think that you said this last night on the live chat. They're willing to sacrifice the dollar because all they know is Keynesian stimulus. And they don't want to actually deal with the essence of the debt issue, which ultimately would mean that we have to go through some sort of systemic bankruptcy process, which would lead to a depression. But depression it's inconceivable from an economic outcome point of view for a whole host of reasons. So therefore, we just have to keep the facade, the illusion going until the point that the currency can't take it on the international credit market. So that is again a very telling statement from the RBA governor, because people ask me all the time, where do you think the government's going to take the economy, particularly with these headwinds coming up? Where do you think Labor may take it if they get into government? Well, the governor is 100% clear. They will, the gross liabilities of the federal government, if you look at the recent balance sheet, is up to 900 billion. That's low according to the governor. We have a long way to go. We can get further into debt, and there is no hesitation from the governor. So it is status quo until the point in which the international currency market says we have no faith in the Australian dollar. Now, when is that point? When will that point come up? Don't know, but obviously we've covered foreign debt. We've got massive foreign debt, more than $1 trillion in net terms, 57% as a proportion of GDP. So obviously this is very high. So the point at which our international creditors lose confidence in our ability to meet our debt obligations, our currency is going to go through the floor. And when you look at what happened in the Asian financial crisis, the South Korean currency fell 40% in 3 weeks. So that's what happens when you follow this line of logic to its ultimate conclusion. And basically, we got the most clearest set of statements from the governor about those topics as to where he thinks we're going to go, which, again, gives me zero confidence about where the economy is headed.
That's very interesting, John. I don't know whether you saw, but last week there was a speech given from the Treasury, but it was actually quite a big speech, and it was talking about how they actually managed the 2007 and 2008 financial crisis and the liquidity that they created and all the various strategies that they actually put together to save the banking system.
Yes.
Right? And towards the end of that speech, effectively the story was we have potential capacity to do the same again.
Yes.
So there is a consistent pattern that we're seeing from both the RBA and the Treasury about we know how to solve the problem if it blows.
Yes.
We'll do the same as last time.
Absolutely. So it is more debt. It is low interest rates. It's a quantitative easing. It is a Keynesian nirvana.
Yeah.
That's what they're going. Now on that point is, so we may have capacity to do it, but we know that the Europeans, the Chinese, and the Americans have less capacity than that we do, particularly with the Americans and the Europeans with their public sector debt position, but also in terms of Japan. So if the world blows up and these big powers don't have the capacity to rescue their economy and the global economy, to be honest, it really it doesn't matter about our capacity. Even if we have capacity, if one of these big powers go, well, it's a tsunami, and no matter what we try to do with our in our life raft, we're just going to be swept right through and going to be crushed. So there is, their statement is quite concerning, but also it's quite limited as well, depending on what happens on overseas factors.
Mm. And it's weird, of course, because overseas there seems to be more concern about trying to deal with some of this debt stuff.
Yes.
So I know that there have been statements from the Eurozone and from the Bank of England and from the Fed about, dealing with the debt. So it seems to me that some of those other countries are a little bit more aware of some of the issues than perhaps we are.
Yes. You go back and look at Australian history in the late 20s, early 30s, during the Great Depression, the sober voices in this country was anti-debt, including Joseph Lyons, who became the Prime Minister under the United Australia Party. Completely anti-debt, very pro-savings, very pro-fiscal conservatism. But that whole, if I could say, British value of British virtue of prudence, it has evaporated among those people who are being paid enormous sums of money to be prudent, and they're not being prudent. They're just being reckless. So again, I'm not licensed to provide financial advice, neither of you, but I am getting questions from viewers saying, of all the banks that are available in the Australian system, which one is the safest one? Well, to be honest, when you're getting these sort of comments from the architect, from the kingpin of the banking system, What's the answer? I have zero confidence in any of the banks because the issue is not the management of each individual bank. It's the people who are responsible for the stewardship of the entire system. They're just saying, we're just going to continue the facade as long as we can take it.
And of course, the whole point there is that this is about protecting this current financial system, right? So financial stability, as defined by APRA, is to do with the structure of the banking system. It's not to do with the real economy. It's not to do with household balance sheets.
No.
Right?
No.
It's a completely different agenda.
Yes. Now, and the interesting thing there is so Steve Keen, he said he made an error in 2008 when he made his big call about a depression, because he said he thought the households had reached the end of how much they could borrow. So with these low interest rates, quantitative easing, he's been shocked with how much additional borrowing the household sector has produced. Now, again, given your commentary on 60 Minutes, I mean, I'm seeing it like every day in the media. Housing crash, it's now happening. Well, the Armageddon hasn't happened. I had someone call me this afternoon, and I said, household debt still rising. I mean, when the point at which the debt becomes the issue, that's when Armageddon starts. We haven't. I mean, the opening act of the theatre hasn't even begun. I mean, we've just taken our seats. Yep. So again, people focusing on house prices, what's happening in Sydney and Melbourne, that's a distraction. And again, I talk to parliamentarians about this, and they talk about prices. Forget about house prices. Just focus on the debt. The debt's still growing. Once that becomes systemically unsound, that's when this will ultimately come to a head. Now, obviously, what we've seen over the last 6 months is credit conditions have tightened, and a whole bunch of people who in 2017 could have qualified for a mortgage can't now. That tells me that the capacity to borrow more, there is still some slack. I mean, if they really open up the lending standards, there is more slack. So we really haven't reached that debt saturation point yet, but I think we're pretty close.
Well, I agree, and bear in mind that some banks are still using the household expenditure measure processes still. That around half of loans being written currently are still being used on those old measures, which we know are understating real expenditure.
Yes.
Right. So expect more tightening ahead. Right. But at the moment, credit growth in housing is at 5.2% on an annualised basis. It's still growing.
It's still growing, absolutely.
Despite the fact that incomes are not growing as
yes,
much.
Yes.
So
well, like it's still growing. But one of the comments that the governor made last night was to say that the availability of credit to the small business sector it's very limited, and we need to increase that. So obviously we've seen the Treasurer Frydenberg announced a new facility so that they can increase the level of credit into the small business sector. So again, I mean the debt bubble. The only way they can get economic growth, but also not only growth, but unemployment to go down and wages to start lifting, is by really pushing the extremes of how much credit you're going to push into the economy. And these guys, it is as if they're living in a fantasy utopia where there are no consequences to this. So I see Kukulis every day on Twitter, and sometimes I take pot shots at him. I mean, there are limitations to this, but these guys think that there is no limitations. I mean, look, again, in the course of human history, this proposition that there's no limitations, I mean, it doesn't stack up. So again, I don't understand the logic of these people, other than that they have been wedded to the writings of John Maynard Keynes, and they can't think beyond what they've learned in the textbook.
I just wonder whether the fact that the election is in May next year has anything to do with this as well. I could be completely wrong.
Well, no. So that's an interesting point. The governor did say that he has the liberty to speak his mind, and he is willing to say things pro-government, or anti-government, or pro-opposition, anti-opposition. So depending on where the issues play. So according to his own words, the political calendar has no bearing about his statements. So I don't think we should be. Now, obviously, when we look at the Prime Minister's or the Treasurer's statements, we should obviously put a political lens as to what they're saying. But the governor's saying, I am independent. I speak my mind. I am PhD. I am Mr. Economist. whatever I say, take it as the gospel of economics. But that gospel ain't going to take you to heaven.
You heretic, John. You heretic.
No. I went and spent $20,000 on a degree and to learn this stuff, and then these things they taught me at university did not prepare me to fully. Now I knew something like the GFC was coming because I was reading more widely. But had I followed the straight textbook that I paid $20,000 to learn to get this piece of paper, I would not have seen it. And this is why most mainstream economists in the country didn't see it, because these frameworks and ideas that are taught in Australian universities, in the economic faculties, just do not prepare you to fully understand how credit works, how the banking system works, and how that actually leads to systemic problems.
Well, let's leave that angle there, right? Because I think we've given it a really good airing, and I think that's a really worrying observation about where the Reserve Bank is. Now let's just switch tracks now to the gold question.
Sure.
Right? So this was the question that was asked and the answer that was given.
Governor, this is Anthony Ross from Chartered Accountants Australia, New Zealand. You spoke about building buffers into the system. I'd really love to know about Australia's gold reserves. So when the RBA plans to do another audit on our gold reserves, and with 99.9% of our current gold reserves in the Bank of England, whether the RBA has a plan to bring any of them back to Australia.
No, we don't. We do regular audits of our gold reserves to make sure all there and accounted for. And I can report that every audit is, we get a clean bill of health there. We keep the gold reserves in London because that's where the centre of the gold lending market is. By able to kind of lend out our gold temporarily, we can earn a small incremental return on it and cover some of the costs of holding those reserves. So I think it's kind of the right place for the gold to be. We don't have any plans to sell any more, to buy any more, or to bring it back to Australia.
I'm interested in what the Reserve Bank said, right? Because this is the first time that I've ever seen him tackled in public on gold.
Yes. The thing is that so I think the previous time a senior official at the bank was asked a question on gold was maybe 3 or 4 years ago, and that wasn't the governor. That was one of the deputy governors. But I was somewhat surprised. I was in front of the computer like during the live stream of DFA, and then all of a sudden I get an email basically saying RBA governor asked about gold. And then someone put out a tweet, and then I was looking to chase for the footage.
So we've played the video. What are the key points that have come out from it?
Sure. So there's a couple of big takeaways in terms of what I took from the video. Now, let's focus on the audit. So he was asked when's the next audit. He never answered the question. When's the next audit? Why didn't he answer? Well, that's just going to create more conspiracy theories as to why can't he tell us when the next audit is. Because you know why? Because if he told us when the next audit is, guess what you and I are going to do? We're going to say, well, show us the results of the audit, and he doesn't want to reveal what that is. Now, he said, quote, we do regular audits. There is no evidence of regular audits. Now, we have a 2013 audit, we have correspondence between the RBA and the Bank of England, and the quote was, this is a first-time review of our holdings. There is no evidence from 2013 to 2018 that subsequent audits were done. Now, if there is evidence, if there were more than one audit in 2013, show us. But he has said something that he cannot back up. Now, if he says he can back it up, put it out there. But I don't think he can. So this is, again, why is this guy sort of shooting his mouth off and saying we're doing regular audits when we can only find evidence of one audit, number one. So then he says, we, as in the RBA, received a clean bill of health. Now, that's extraordinary because the point of the audit is not to give the RBA a clean bill of health. The point of the audit is to give the Bank of England a clean bill of health. So I don't know whether he misspoke or whether he's actually really working for the Bank of England. Or because that's going to lead the conspiracy theorists to think all sorts of things on that front. But again, if this statement is true that the audit gave a clean bill of health, show us the audit report, put it on the table. People have tried to do it through an FIO process, and they say if we reveal the audit report, it may damage the relationship between the RBA and the Bank of England. Well, that's not good enough for me. We don't have to deal with the Bank of England, and there's a whole host of countries around the world who are now coming to the realization that dealing with the Bank of England is actually counterproductive. So if we've got to damage the relationship in order to restore trust among the Australian people, so be it. But guess what I did tonight? Like this afternoon, I had to tell my daughter. I said there's this guy out there called the governor, and the governor said last night that he's not going to bring Australia's treasure home. Well, the thing is, my daughter, I mean, she seemed, quite disappointed. But then she said, well, because she ain't going to accept this sort of crap. So she said to me, well, why don't we go to London and let's be sneaky and let's just take it back anyway. So again, the thing is like, whether it's me or my daughter, we're not going to, just because this guy's on $1 million a year, he's got a fancy title, fancy degree, PhD, all of this sort of stuff. We're not going to accept these statements on face value. We're going to go to the substance. And again, why is the gold still there? He says because we are involved in the business of leasing. Now, again, on the issue of who we've leased to, they say commercial in confidence. We won't tell you. But are we getting the gold back? What is the circumstances of the gold? They're not over there checking. Because there hasn't been any audit since 2013, from what we can tell. If there has been a physical check, unfettered access to the Bank of England, tell us, show us. Otherwise, if you can't show us, well, let's just assume that it's not happening. So now, 12 basis point return last financial year, about $700,000 on $604 million of gold. That's not much of a return. So that's not worth, because he says we have costs associated with storing, with possessing this gold, storing, etc. So leasing some of the gold generates a little bit of income that would help us cover those costs. 710,000, 710,000. I mean, you could just cut a couple of, make some very minor tweaks to the federal budget, and you can save 710,000. So the return just does not justify why, given the history of the Germans, the Venezuelans, all of these countries, and their concerns about what's happening in the gold market. There is no justification for us to be involved in gold leasing and for the gold to be there. So basically, he basically said that that there is no intention to increase our gold holdings, to reduce our gold holdings, and there's no intention to bring the gold back. So there's a lot of DFA viewers, a lot of people on other channels that have been following our work, who, from a national sovereignty perspective, believe that it's in the national interest to have our gold here. Well, the governor is categorical. It's not coming back. Now, some people may say, and even on social media this afternoon, as I was posting certain things, to go, he can't bring it back because it doesn't exist. Well, I think the RBA has got to show us that the gold exists. They won't show us. The Bank of England won't give us unfettered access. But if people believe that it is in the national interest, in the people's interest, that the gold is here, the Reserve Bank governor will not do it. Even though he has the ability to bring it back, he has said on the record, get stuffed. So my position is, and I've said this privately to many politicians, this governor is quite irresponsible, not only just on this gold issue, but particularly on interest rate policy. I mean, even Warwick McKibben, the former RBA board member, has criticised the current governor and the current board for keeping interest rates too low for too long, and the cash rate should be higher. So on a whole host of fronts, we've critiqued the head of APRA on a whole range of issues. Well, on a whole host of other issues, the RBA governor has just not done the job that is going to provide prudent stewardship of the economy. And when you listen to some of his public statements, they don't give me confidence. They give me cause for concern. So I think it's time for the governor to go. We either need a new governor that's going to listen to the public interest, bring the gold back, or if we can't get that done, then the only ultimate recourse for the people is via Parliament. So for those people who, because after our last video, certain people did email the Reserve Bank and they were asking for their email, all of this. Well, now you know that any further communication with the RBA is going to be futile because the governor has said categorically, get stuff not coming back. So it must be, we must take this matter to the People's House, which is the House of Representatives, and basically apply political pressure on Parliament to basically say, we want you to force either remove the governor, put a new governor who will abide by the people's wishes, or place either new law or pressure on the governor to relent. So that's where we're up to. So if that political pressure doesn't come on Parliament, the gold will never come back to the country.
Right. Okay. Well, we are at a bit of an impasse then, aren't we? Really?
We are stuck here. I mean, my daughter's suggestion was to, would be for her and I to go to London and sneakily try to take the gold and bring it back. But
somebody might notice.
Indeed.
If it's still there.
If it is still there. But other than some sort of covert secret operation to bring back the gold, we have only two choices now. Get Parliament to change its mind or to be focused on the issue, or to remove the governor. Otherwise, the gold is not coming back.
John, thank you very much. Appreciate your time.
Thank you.
So there you go. I don't think the gold quest is quite over yet, but we do seem to have hit a bit of a rock in the road. So let's see what happens next. I'm Martin North from Digital Finance Analytics. Many thanks for watching. We'll see you next time.